Greetings, members one and all of the Salivation Nation. Gold and silver prices weaken a bit on some pretty encouraging economic news, mainly the U.S. jobs data. This is pretty big. Usually jobs are kind of the ultimate indicator of the health of the economy. Now, that does not mean that necessarily we are out of the woods or that a recession isn't coming. It's just that it's not coming anytime in the near future. In other words, in the next couple of months. But, things can change. They can change quickly. And make no mistake, I like to be optimistic for sure. I do believe in the ingenuity of the American economy, the spirit of individualism and the free markets. And I believe that we're seeing that more so now than ever before. At least in the past few years, we're seeing more and more of the unleashing of the free market. And I think that is what is helping keep the economy going where it is, in spite of other bad news we've seen with the inverted yield curve and the likes. But this is from Kitco News, and they're saying here gold, silver prices are modestly down in early U.S. trading on Friday, following what the marketplace perceives to be a generally upbeat U.S. unemployment report. Even though the key non-farm payrolls numbers come in slightly lower than expected, December gold futures were last down $3.50 an ounce to $1,510.30. December COMEX silver prices were last down about 16 cents at $17.51. The U.S. employment situation report for September from the Labor Department showed the key non-farm payrolls numbers up at 136,000. That was slightly below the consensus forecast of up 145,000. However, some of the other internals of the report were deemed as upbeat, including the overall unemployment rate at a 50-year low of 3.5%, which was lower than expected. Still, it would have taken a significantly stronger than expected jobs report today to sway traders and investors away from the general notion that another U.S. interest rate cut is coming from the Federal Reserve soon, following this week's very poor U.S. and European manufacturing reports. So there's other indicators here, and a lot of the stuff can trade, and I think a lot of it is because of the rest of the world, which can obviously affect the United States as well. The U.S. stock market and the U.S. dollar moved up from lower price levels overnight following the employment report. And make no mistake, these numbers had only a marginal effect on the prices of gold and silver, but they are down a little bit as a result of it because I think there's still some worry out there. Reports overnight said that Hong Kong authorities have banned people from wearing masks in public following recent violent protesting there. This new rule could further escalate the civil unrest in Hong Kong. The situation could quickly move to the front burner of the marketplace, especially if mainland China gets more deeply involved in the matter. NYMEX crude oil prices are up and trading at around $53 a barrel. Oil prices are in a steep slide from the spike high scored in September. Other U.S. economic data due for release Friday includes international trade report. Several Federal Reserve officials are scheduled to speak, including Jerome Powell. And I've not heard reports of what he said yet, but nonetheless, the gold bulls, and just getting some technical analysis here, but it seems like there's talking about solid resistance at 1543 and a floor of 1465. And I believe that's probably fair analysis because it's been very kind of with gold especially, it's been flirting with that $1,500 level. It has no problem going below it. It has no problem going above it. So that's kind of where things stand on that. Let's take a look at the precious metal prices now. As of the recording of this video, we can see that there are only modest movements downwards for the metals, gold, silver, and platinum here. Platinum took the biggest loss here so far today, but gold is above $1,500 and silver is above $17, and I believe that those are kind of the floors now. Although, as I said with before about gold, is that it will flirt around with that $1,500 level, and whereas silver has been pretty steadily above that $17. I saw it mentioned, in a prior publication and from some of you that it did get below $17 into the high 16s briefly, but that was only a small little momentary lapse there. Now the metals, where they go from here and into next week, we'll see what happens. Now, my guess is that now, considering this positive economic data with regards to jobs coming this week here at the end and other things, if the Federal Reserve does lower the interest rates some more, I think we'll see the precious metals go up a bit. Probably not by much, might be a nominal movement upwards, but I think that kind of activity on the tail end of a positive jobs numbers or any other positive economic data sends a negative message, which means that people are thinking the economy is not as strong as the numbers indicate. There's some fear there, and the Federal Reserve sees it, so they're going to lower their interest rates. If we were to see a lower than expected jobs numbers come out, then over this period here, and the Federal Reserve decides to lower interest rates, and I believe it will cause the precious metals to go down a bit by the same level, just modestly down a little bit, because they're seeing it as at that point they're seeing it as sort of an injection to help get the economy back on track. Whereas this news, now that you see the economy, at least by the jobs numbers, and by the way, wages are going up too. They say an average of 2.9% increase from a report I heard this morning over the past year, I think is encouraging to see that wages are still going up. And so that those two things, I think, are positive developments here that are going to, I think, potentially cause the prices of gold and silver to go up when the Federal Reserve announces that other quarter point rate cut. And I believe they will do it, by the way. I believe they're going to cut the rates a quarter point, and we'll see them go down a bit. But make no mistake, these movements that we've seen here as of late, every time the gold and silver goes up, it tends to stay up for a time, and then once in a while we'll see them dip back down. And it may be a relatively significant smackdown of gold and silver, but it's only for a brief amount of time before something else comes and worries the markets. That kind of psychological effect, I believe, is what we're going to see from here on out, so that we're going to see gold and silver and platinum and palladium. Look at palladium, by the way. It's up again, $13, $16.75. We're $25 away from it passing the $1,700 mark. If we see this, I think we're going to see a continuing trend in this direction, where the metals will go up, maybe stay flat, but still stay up, then get smacked down for a bit, but just for a brief amount of time. In other words, the bullish play with the metals is going to hold on tight, I believe, through the end of this year and into next year. And I believe with 2020 around the corner, it's an election year. There's going to be some politics that are come into play for sure. We've got things heating up with impeachment. And by the way, on both sides, there was a stunning report about election interference documented that had occurred from Ukraine with the Democrats starting in 2014. And so this is going to complicate matters on both sides. And I think that effect in where things are, and the faith in government and faith in our elections and how they're being influenced, I believe, could weigh on the markets in general, and specifically gold and silver in general, because it seems like there's potential for instability there as we get much more scrutiny on both sides leading into the 2020 election. Remove ourselves from the politics for a moment, just what people are saying. Again, as I mentioned before, we are long overdue for a recession, just in terms of the historical chart timeline for recessions. Typically we have one between about one every 9 years, and we're well past that now, and so we're overdue for a recession. Analysts have been saying that it's not going to happen in 2019, but probably will happen in 2020 or 2021. So the likelihood of it increasing, everybody that is in the financial world that has been looking at these analyst figures all pretty much agree that it's probably going to come to a head one time or another. Now, obviously, there's things complicating it, like trade. The trade is really causing some havoc in the markets for a myriad of different reasons. Obviously, with China, the USMCA is another one that has been agreed to, but has not been codified yet by the legislative bodies of the nations, of all three nations. I know that the United States has not passed it. I don't think that Canada or Mexican legislators have passed it either, but I could be wrong there. You've got that. You've got Brexit. You've got general overall world. Most of these nations are either at very low interest rates or negative interest rates right now. And so there's concern around the world in different nations and their economy. So as we move closer to 2020, I think that we're going to see much more fear-driven markets. I think it's going to be a fear-driven market from here to the election at the very least. And I think that after the election, no matter who is elected, there's going to be movement one way or another in the markets. And I believe that movement, one way or the other, will be a test, or it'll be sort of the new normal with the markets and where we are heading, and indicating in terms of where we're going to go as a nation, and also where the economy could possibly sway. Make no mistake, if there is a recession, there's ways that we could get out of a recession relatively quickly, even though most are predicting a worse recession than what we had seen in the past. But the metals today are reacting. It's a slight movement, but I think it's worth talking about, because I think what we're seeing here, even though we got some positive economic data, look, the metals didn't react as much as we thought, because there's still some fear. And as we move closer to that 2020 date, when analysts are predicting it happening, a recession could occur. I think that's why you're seeing very cautious movement in the markets. That's why I wanted to discuss that. Post your thoughts below. Fascinating indeed. I would like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.